Ever feel like your savings account is supposed to make you money, but instead, it's barely making a dent? If you are new here, I'm Ekow, a property investor, a legacy builder, and a former banker. And in this video, I thought it would be interesting to cover the 5 dirty truths behind the so-called high interest rate you've been sold to in South Africa. Starting with truth number 1, how the banks hide true rates. You've probably seen those up to 11% interest rate in your bank ads. Let's break it down. If your bank offers 11% nominal rate, but the effective rate is really only 5.5%, that's a 50% difference in how much your money can actually grow. That's not factoring in any crazy fees. Trust me, it's easy to get fooled by those flashy ads. Think of it like this. If a bank promises you 11%, that's the nominal rate, but the true return, the effective rate, is only 5.5%. It's like advertising a sale of 11 rand off every 100 rand, but only getting 5 rand 50 off a checkout. You think you are earning more, but when you get to the end of the day, you've lost out on more than you realize. But wait, before we get to truth number 2, I've got something special for you to help you get started. Download my free Money Master PDF now. It's packed with step-by-step guide on how to take control of your financial future. Number 2, the myth of competitive rates. You've seen it everywhere, competitive rates and the best in the market. But here's the truth. Most of these accounts are offering rates way below the market average. Yeah, you heard me, way below. Let's do some quick math. If you are earning 4% on your savings, that's 4,000 rand on a 100,000 rand deposit. But the market average is closer to 7%. That's 7,000 rand in earnings. But settling on 4%, you are leaving an additional 3,000 rand on the table. So where's the competition? Whether you are saving for a rainy day or building a wealth portfolio, every bit counts. I get it. I've been there. But don't settle for less. You can get better deals. Let's say you are saving for an emergency fund and you are putting away 1,000 rand each month. At a 4% interest rate, you earn 40 rand interest at the end of the year. But at the market average of 7%, you earn 70 rand. That's 30 rand more for doing nothing extra. It's adds up. So with the market average of 7%, you earn 840 rand on interest. But at the rate of 4%, you only earn 480. That's a difference of 360 just by choosing a better rate. To put it simply, you are leaving 360 rand on the table by settling for a lower rate. I know the game, trust me. You need to be using tools like comparison platform to find real deals, not just relying on the bank's flashy ads. And let me tell you, that was the last time I ever trusted a competitive rate ad. Truth number 3, interest rate floors and ceilings. Let's talk about ceilings and floors. No, not the ones in your house. I'm talking about the limits bank place on how much interest you can actually earn. Most interest rates have a floor, a minimum interest rate, and a ceiling, the highest interest rate you can earn, no matter how much you deposit. So let's say you have 100,000 rand in your savings account, but the cap limits your interest to just 5,000 rand a year. That's a hard ceiling on your money's potential. Trust me, you don't want your money capped like that. It's like putting a lid on your growth. You might think your money is working for you, but the banks have a nice little cap on your earnings. This is where the business mindset comes in. ROI, return on investment, is all about maximizing the return on every dollar or rand you invest. When your account has a cap, you are leaving potential growth on the table. A business owner will never settle for a capped profit. Why should you? In my early years of investing, I had an account that limited my return, capping how much I could earn. At the time, I didn't realize how much the cap was holding me back. Once I switched to an account with no cap, my money started working hard for me. It's one of the best decisions I've ever made in my financial journey. Imagine you are trying to grow your savings for a big purchase, say a new car. You've saved 200,000 rand, but your account cap means no matter how much you deposit, your interest cannot go past 5,000 rand a year. That 5,000 is nice, but it could be so much more if there was no cap. Truth number 4, why you are earning less than expected. It's easy to think you are actually not saving enough, but what if I told you that inactivity clauses and withdrawal penalties are actually what's costing you? I get it. It's hard when you are actually trying to save, but hidden fees can actually eat into your profits. I've been there. Here is where the ROI concept really hits home. Some banks will charge you just for accessing your own money. That means the longer you leave your cash sitting in your account, the lower the ROI you are actually earning, because those fees are eating into your earnings. But here's the problem. You don't even know how much you are losing. The solution: avoid accounts with penalties that erode your ROI. You wouldn't run a business with profit-eating fees, so don't let your savings account do the same to you. I once had an account that charged a fee if I didn't deposit for 3 months straight. I thought I was doing great by letting it sit there, but when I checked my statement, I was actually being charged monthly fees that ate my savings without even realizing it. When I started comparing rates and understanding fees better, my savings actually grew faster, and it changed my approach to how I manage my finances. Tell a friend who needs to know this. Don't let your hidden fees eat away your profits. Finally, truth number 5, demand transparency from your bank. The next time you walk into a bank, don't just accept what they tell you about interest rate. Demand answers. Have a checklist, ticking off items like minimum balance, withdrawal fees, and nominal versus effective rates. Trust me, they will be surprised at how much you know. It's your money. Don't settle for less. Ask them exactly how they are calculating your interest. If you want your money to grow, you need to know exactly what your ROI is. Just like a business needs to track every penny, you should track how exactly your savings are working for you. A friend of mine walked into his bank with a checklist just like this, asking exactly how his interest was calculated. The bank manager was surprised, but after a detailed conversation, he found out he was eligible for much higher interest rate after switching his account. That's your money. Make it work for you. Here's a quick recap on everything we've covered. Screenshot this and share with your squad. Is your bank keeping you in the dark? Comment yes or no if hidden fees have caught you by surprise. Here's what you need to remember. 1. Know the real rates. 2. Don't settle for fake competitive rates. 3. Watch out for interest rate floors and ceilings. 4. Never let your bank hide fees and penalties. And 5. Demand transparency from your bank. If you want your money to grow, take control of your savings account today. Start thinking like a business owner. Ask questions, do your research, and make sure your savings are working for you, not against you. If you haven't already, make sure to download the Money Master PDF for a step-by-step guide on how to take control of your financial future. And if you found this helpful, you won't want to miss my next video. Make sure to check it out to keep building your wealth. Be a legacy builder. See you in the next video. Peace.